traction in primary market to the earnings corner. Companies are coming out with their earnings, and now we have the management of Gulf Oil that has posted its number. The stock is down and out more than 3% in trading session on the back of its results. We do see the profit that's come in at 1.2% higher on a year-on-year basis, but the margin is taking a knock of 24 bips on a year-on-year basis. But tell you what, let's get the management on board to get you the details of the numbers and the growth roadmap ahead. Manish Gangwal, who's the Chief Financial Officer, Gulf Oil Lubricants India, who's joining us now. Hi, thank you so much for joining us, Mr. Gangwal. First up, you had mentioned that you have achieved the core lubricants volume growth for 2 to 3x the industry rate. For the benefit of our viewers, if you can tell us in absolute terms, how much has the volume growth been?
Yeah, good afternoon. Thanks for having me. Yes, so right, we have grown our volumes overall by 9.5%, which is a very, very robust growth. As you can understand that lubricant industry usually grows 3% to 4% in terms of volume. So we continue our trajectory of 2 to 3x volume growth above industry. And that has been quite heartening. And this growth has come from all categories, including, OEM growth has been very, very strong this quarter. B2B growth has been very strong. Some of our personal mobility, agri-related lubricants, all have grown double digit in this quarter. So overall, quite a resilient growth in a quarter, which is usually, as you rightly picked up, is a seasonally impacted quarter due to monsoons. There are less construction activities. There are less vehicular movement. So overall, in spite of this, we have delivered a very, very strong volume growth and a good double-digit top-line growth.
9% volume growth and double-digit top-line growth is what you reported in the second quarter. But let's also talk about margins, because they've been steady in that 11 to 14% range for the last several quarters. Do you expect to break past the 14% mark over the next few quarters? How have raw material prices been, and what kind of impact then do you expect on margins going forward?
Yeah, so the forex has been in this quarter slightly a dampener in a way, because rupee depreciated sharply during this quarter. Between July to September, rupee depreciated nearly 3.5%. And as you will know, we import close to 70% of our raw material is imported. And that's where we have our impact on the margins due to rupee depreciation. But we have been able to still maintain our gross margins, as you can see, and more or less in a position to take some selective pricing calls. We have been able to manage our other cost of other inputs, and overall we have delivered still EBITDA, which is our band of 12 to 14%. We call that as a guidance, and we have been able to maintain that band. We believe that if rupee stabilizes at these levels and improves, crude is at a good level today, and that benefit of those lower crude levels should also reflect in the coming quarters in our input cost of base oil. So overall, we see positivity from here on in terms of margin trajectory.
Right, we'll keep with the margin, sir. Since you are also working on driving costs and margin management initiatives, what is your target margin profile?
So in a good quarter, we are looking at a higher trajectory of this 12 to 14% band. You will have to also appreciate that we have invested in EV businesses, EV charging businesses. We are nurturing those businesses. Some of those costs are also taken into account in the P&L of the Gulf Oil. But these are future businesses we are nurturing in terms of battery, in terms of EV chargers. We have a subsidiary where we invested, as you know, nearly 51% earlier. And the board has now announced another 14% stake increase. So we'll be now 65% in our subsidiary of EV charger. So the investments are also going on in our brand, in our manpower. So all around, we are looking at a future which will be very, very robust and different from what Gulf Oil today is.
All right, so that's the outlook when it comes to margins and revenue growth going forward. Thank you so much for taking